Business owners have the opportunity to use the infinite banking concept in very creative ways. We're going to talk about a company today that's using participating whole life insurance and the infinite banking concept to create some very unique financial packages, both for the company and the business owners.
We know the details of this case because these business owners are clients of McPhee Insurance.
Here are the details you'll want to know about this company before we get started. It's a large multi-generational family manufacturing company. There's currently 5 owners, brothers and cousins. They all have families of their own. They want to make sure that if one of them passes away or leaves the company, that they have the funding available to buy out that partner and their family so that the business can continue operations. They also want to build a cash reserve that they can use to help self-finance some of their manufacturing activities instead of always using a line of credit.
Now, it's a multi-generational company. Michelle, how long does it go back? Was it a great-grandfather or a grandfather that started this company?
I believe it was their grandfathers, and then, of course, their fathers were in the business, and now it's the brothers and cousins.
And they are manufacturing some very large equipment, and there's a lot of expenses going on in this company and a lot of profits being generated by this company. So the way this all started is we had several in-depth conversations, 4 or 5 in-depth conversations, because the question was, will this work for our company? Will this work for us?
And when they're saying, will this work, they're talking about the use of the infinite banking concept with purchasing whole life insurance. And they were trying to figure out, will this work and how will this work?
And something that was really unique about working with many companies is they already understand that equipment, wears out or needs to be replaced. And so they have to have some sort of savings fund to be there to replace that equipment. Otherwise, they're going to face pretty expensive finance charges if they have to replace it and they don't have that fund sitting around. So it was fairly straightforward for this company, business partnerships, to understand that, we're just going to switch where we're keeping that money from over here in this account that is not going to do anything for us once we spend it, into life insurance that will keep growing even if we have to tap into it to replace equipment.
So that's like some business owners, they will, some people actually keep envelopes. Some of them have accounts where they know they're going to have to pay taxes. And so they'll move money into an account just for taxes. And then they know that their equipment is going to be wearing out. So they'll have an account just for equipment replacement. And on, different accounts for all the different expenditures. You're saying these gentlemen realized, hey, we could be putting it into whole life insurance where we don't have to earmark it just for this, that, or the other thing. So not just for taxes or business equipment, but they could put it away where they could get it for any one of those needs.
There's many different businesses that need capitalization like this. The banking business is one of those businesses. So people that were already used to dealing with equipment that wears out, has to be replaced, they understood the need for capitalizing, setting aside the capital ahead of time so that it was ready when those needs arose. The banking business is very similar. You have to set aside a large amount of capital to even get started in the banking business.
Millions of dollars. You've got to go to the comptroller of the currency, and they've got to approve your business plan and see that you've got those millions of dollars sitting someplace that you're not going to touch, that's earning just a nominal, minimal return on it, very secure. And then you've got to go to the FDIC and get insurance, and you got to go to the Federal Reserve, and they've got to approve your business plan that it's sound and it's not going to just rip people off if you start loaning money. Because when a bank loans money, they're not loaning their money; they're loaning their depositors' money, and the FDIC and the Federal Reserve are responsible for overlooking that. So it's a long period of time. And that's what Nelson Nash always talked about when people wanted to think about starting the infinite banking concept. There's got to be a period of time of capitalization. And Michelle, you and I were talking just last night about egg prices. We capitalized in the egg business last spring.
We have eggs at our house because last spring our son Jordan just said, you know what, I want to raise eggs again. And so he bought chickens. He bought little tiny baby chicks and brought them home. He's been taking care of them all this time. And it was just in the last couple months that they started laying eggs. And so now we're getting eggs every day. But when you say, hey, I want egg prices to come down, you can't just say, okay, lower egg prices. Because right now we have a shortage of chickens in this country. And even if you get chicks today to replace all of those, you're not going to get eggs till a few months from now. And right now, fuel costs, costs of feed, all of those things are very high. In fact, I remember when eggs first went up several years ago, and I was in the grocery store, and the person in front of me was talking to the checker. She could not believe the price of eggs, nor could we. But she said, you know what? I think I'm just going to get some chickens from my backyard. And we had chickens at the time. So I inserted in the conversation, I said, the cost of feed has also gone up tremendously. A lot of times people at the checkout counter, they're mad that the store has the price of eggs so high.
It's not the store's fault.
No, they don't realize it's also the fuel. It's also the feed. And then we could turn to the farmers or the manufacturers of the feed and say, look, they're just being greedy. No, their fuel has gone up. Their prices to even produce the feed have gone up. So you get this trickle down effect. And, you know, what needs to be done is the costs need to be cut all along the way, way back. And eventually, when that is done, we will be seeing prices come down dramatically.
The infinite banking concept is just a concept that is a sound economic principle that if we build this capital fund that we can tap into and not lose the growth on it by doing that, now we're kind of double dipping. We're getting the growth of our money while we get to use it someplace. And that's what Nelson's talking about, the capitalization phase. And this company, these business partners, these brothers and cousins, they said, we understand that. There's a cost to capitalization in everything. And we see this, and this is well worth it for us to do this.
To that point, we often, people want to know, how much is it going to cost to get started with a whole life insurance policy? And we usually recommend 10% of their income is a good place to start thinking about purchasing a policy. And so these brothers and cousins looked at that. They came up with a number that they were able to use for their premiums. And in the first year of having the policy, they can't necessarily have enough, they won't necessarily have enough to borrow from the policies to purchase a huge piece of equipment that they need in their business. They realize it's going to take a period of capitalization. Real estate investors, oftentimes they'll come to us and they'll say, okay, how big of a policy? And then they look at the cash value and they go, well, that won't allow me to purchase a new piece of property. Well, no.
Not yet.
Exactly. It takes time to capitalize, but they may be able to use it to make a needed repair on a current property.
They can certainly use it to start establishing a cash cushion that they can borrow against for repairs on multiple different pieces of property at different times.
And it could be that in a few years, they will have enough cash value to fund the down payment on another piece of property.
Certainly. There's really two ingredients that we're talking about with this capitalization process. Part of it's money, part of it's time. Those two ingredients are part of the capitalization process. So when these brothers and cousins were looking at funding their policies, they were looking at how comfortable, how affordable it would be. Were they also looking at the time element that was involved? Were they trying to hit a certain target by a certain date?
They were looking more at just what was comfortable and affordable because they already are in business. It's a multifamily generational business, been doing this for a long time. They already have sinking funds that they're replacing equipment with. So they realize, yes, that there's going to be time before they can transfer all their sinking funds savings into life insurance simply because of the IRS rules. And that came out in those 4 or 5 meetings we had before they went ahead and pulled the trigger on this. So that's one thing about working with really smart business people is they already understand this concept. Banking is part of everything that we do. Nelson Nash said your need for finance is extensive during your lifetime. And with a business, you can just multiply that by 10 or 1,000 times, depending on how big your business goes. Need for financing is huge. And you're either going to use your own money or you're going to use someone else's money when you finance. And there's a cost to it both times. So the infinite banking concept comes along and says, how can we recapture the cost of finance? How can you be the bank so that instead of paying interest and principal to somebody else and that money just walking out of your life forever, or paying cash and never seeing that money again without having to save it all up again, how can we do the same process and have that money to use over again and recapture some of the interest that we have to pay?
So these business owners were already using certain principles of the infinite banking concept in their sinking funds already. And now they're just adding the next step of efficiency by moving those sinking funds. I love how you just described that. They're moving that capital from their sinking funds into the life insurance so that they're earning a better return on that reserve over time and getting more protection for the partners too.
And of course, they can't do it all at once. Otherwise, they run foul of the IRS rules that say you've got to pay this policy in a certain way over 7 years, or we're going to get you in the tax bucket again. So it's just long-term planning. And that's really what banks have done by setting up their investors with millions of dollars and realizing it might take 3, 4, 5 years before they even get their charter to open a bank. And then after that, guess what? They've got to find an office building that they can lease. And then they got to hire managers, and they got to hire employees, and they got to attract depositors. All that takes money. And so that's all part of the capitalization phase before you start doing it. And the nice thing about the infinite banking concept, insurance companies have to go through almost the same protocol as banks do to get their charter to sell life insurance. And they have to do it on a state-by-state level, whatever state they're going to sell in.
Because insurance is state regulated, not
That's
federally.
right.
Yeah.
We can piggyback onto what the insurance company has already done and not have to wait for such a long period of capitalization, because we can build these life insurance policies based on what they've done for us and have capital available really within the first few days of opening a policy.
After we get back from the break, we're going to talk about a business owner who wasn't so successful in getting his partners to join in purchasing whole life policies. And we're going to talk about other business owners who have used their life insurance policies to fund their business needs.
Ken is a client of McPhee Insurance. In 2008, he lost about half of his investments. That was before he was a client, but he had been following conventional financial wisdom to a T. Many people don't put enough money away for their retirement, but Ken did put money away for his retirement. He says the most frustrating thing when 2008 came along, he had been putting money away for 35 years, and it hadn't grown to what he expected it should have. Then 2008 came along, and it took half of it away. He really felt like he was backpedaling instead of making progress the way he should. That's when Ken discovered using life insurance as a financial tool with the infinite banking concept. He says not only does it give him more stability with his finances, but it puts him back in control instead of giving control to somebody else. Many people find out about using life insurance as a financial tool during an economic downturn or a market crash. And while it's good they're getting the coverage they need, we really wish we could turn the clock back for these people so they could have the good life insurance in place before the economic downturn or the market crash. Because good life insurance helps you to keep more of the money that you make, grow your wealth, and have financial peace of mind even during turbulent economic times. To get the good life insurance you need, call McPhee Insurance at 702-660-7000. Call us sooner than later.
Some businesses are more service-oriented, but they still have expenses that need to be financed. We're going to talk about some of those type of businesses in a little bit, but before we do that, I want to read this letter we got from one of our clients who is a real estate investor. Actually, he's a commercial real estate investor, which is a little bit different than someone who rents houses for people to live in or apartments and that kind of thing. Here's this letter from Steve that we got by email. It says, "Hi, Tom. Like you, I enjoy thinking about how money, investments, and wealth grows. Thanks for doing the weekly podcast. I usually catch your discussion en route to work and back." This fellow is a anesthesiologist at a local hospital. He says it's always good to hear your discussion. Here are my thoughts, my latest thoughts. In light of using whole life insurance to grow and store wealth, I'm thinking often about commercial real estate. Of course, he's a commercial real estate investor. I like to compare in my mind the strengths and weaknesses of each. Here's my comment. Whole life insurance is a derivative of commercial real estate. Here's why I say that. What provides the growth of the policy? What gives the insurance company the confidence to make those guarantees they can? And how does the insurance company grow their wealth apart from premiums that the policyholders are paying or the interest collected on policy loans that they give their policyholders? Keep up the good work. Blessings to you and your family, Steve.
Of course, he's recognizing there that insurance companies do invest in commercial real estate to help
Hugely.
their returns. And they also invest in bonds. So it's a combination of those things that help make up the insurance company's portfolio.
I remember when we were in Manhattan here a few years back ago, and our tour guide said, you see that New York Life building over there with the gold on the top of it? Not one New York Life employee works in that building. That is prime real estate in downtown Manhattan. It's all rented out. And we know that's true here in Indianapolis. One of the tallest buildings in Indianapolis is the One America building. It's an insurance building. They occupy 2 or 3 floors of that. They also own several blocks of real estate in downtown Indianapolis. All that is rental property for them.
Just a few months ago, you and I took a trip to Cincinnati to another insurance company home office. And when we arrived there, there was another building very close by that had the name of another insurance company on it. But you entered the same drive to get to both buildings. And so we asked about that. And it turns out the company we were visiting owned both buildings, but wasn't using one of them. And so they quickly rented it out because they have to make a profit for their policyholders. And so they turned excess real estate that they weren't using into profit.
That's excellent. So different businesses do use the principles of the infinite banking concept differently. Service-based business may not have as much needs for equipment. Businesses that are in construction, businesses that are in farming, businesses that are even in retail will have financing needs. Retail businesses may not have as much equipment as construction, farming businesses, or even businesses that are leasing equipment out, but retail businesses have inventory that they have to keep. Sometimes that inventory is financed by the manufacturer of that inventory. Sometimes they have to finance their own. And a great example of that is another client that we have who would have to use floor plan financing for financing cars, but instead uses his own financing because he has built the capital ahead of time.
And floor plans are kind of an interesting concept for people that don't understand it. A floor plan will come into an auto dealership and say, hey, we'll put this car on your lot for free for the first 30 or 40 days. But if you don't sell it in that time, we're going to jack the interest rate up to 12, 13, 14, 15, 20% the longer it stays on your lot. And so there's a pressure to get that car off the lot as soon as possible.
Yeah, turn over that inventory.
Well, our client who's using his own floor plan by using the infinite banking concept, he's not under that pressure. In fact, he's under so little pressure, he doesn't even have a salesperson. He just puts the cars on his lot and they sell themselves because of his reputation in the community. And it's a very lucrative business for him.
And the cash values in his life insurance policies have allowed him to do that. And interesting, since we're talking about, it takes time to capitalize, he capitalized whole life insurance policies long before he even opened this business. So what he did back then, not even planning for, not even dreaming that he would be in that position later, but what he did back then and what he built up over all those years was then a resource for him to start this business and then later to expand in this way that he has.
Something Nelson always said, if you're going to be doing the infinite banking concept, you have to be honest with yourself. What all of these business owners that we're talking about today are doing is they're saying, well, if I didn't have the infinite banking concept to finance, what would I have to pay? So that's what I'm going to pay back to the infinite banking concept. It's like someone that is in credit card debt, and they're paying 20 or 24% to the credit card company. And if they borrow from their infinite banking concept life insurance policy, and the policy is only charging 5%, is it really honest for them just to pay the 5%, or should they be paying the 24% that they were paying to the credit card? If they want to get ahead, if they're honest with themselves, they'll go ahead and still pay themselves 24%. If they just want them to get out of debt real quick, they'll only pay the 5%.
And you might think, well, what if cash flow's out of balance? Well, you can stretch out the term. In that case, make cash flow balance, but still pay a similar interest rate.
Now we're going back to the same concept you talked about earlier. There's two phases to capitalization. There's time and money, and there's two different phases of finance, time and money. Those factors stay with us regardless of where we're going.
So before we went to the break, I promised people that we were going to come back. In the first part of the podcast, we talked about the brothers and cousins, all business owners, on the same page say, yes, let's purchase these policies. And they were in agreement about that. But we know another business owner who was so excited about the infinite banking concept, went to his business partners, and his business partners didn't want to listen. They didn't want to cooperate. So Tom, would you tell us about that business owner?
It's a friend of ours in Southern California, and he's an orthopedic surgeon, and he has a private practice with a group of other doctors. And they needed a CAT scan unit, a CT unit, in their office to just make it more convenient instead of always having to refer out to the radiologist. So our friends suggested to his partners, why don't we, fund this ourselves and just pay ourselves back? Well, his partners hadn't listened to him about starting whole life insurance. They had no ability to dip into their real estate investments or their stock investments that they'd put their money into. And so they said, we're not really interested in doing that. I don't see how this would work anyway. So our friend, he just dipped into his life insurance. He leveraged it, and he financed the CT unit himself. And his partners ended up paying him 17% interest for the use of that CAT scan unit as they paid it off, just like if they would have leased it.
And they could get those funds a whole lot more quickly than actually going through a loan where they would have had to provide all their financials and all that. Instead, the partner just, signed a paper with the insurance company. I want the loan deposited to my bank account, or maybe he had a check mailed. We don't know. Mm-hmm. And then they had the funds to go make that purchase, and possibly, I don't know the details on this case, but I know it's happened with many other cases. When you go and you have cash to pay, sometimes you'll get a cash discount for paying all up front. The partners may have had that, so they might have had less that they actually need to finance because there was cash in hand. And then he financed that for the company. The company was going to have to pay that money anyway, and he reaped the benefits of that. When that CAT scan unit was all done being paid for, all the money was back in his policy.
One of the most successful real estate investors I know, he understood that whole life insurance was a great place to keep his retained earnings in his corporation. Retained earnings are subject to judgments. So if they get sued, those retained earnings can have an attachment, a judgment attached to them, and you could lose them. Being
sued is a real thing, and real estate owners know about that because, if anything goes wrong or somebody falls on a property, there's always those concerns that there could be a judgment.
He took the capital out of his real estate by taking a loan against it and put it in life insurance. And it wasn't too long after that he did get sued, and it was judgment proof. No one can attach a lien. In most states, nobody can attach a lien to life insurance. Business owners have some really unique opportunities. And of course, that specific one isn't just available for business owners. It's available for everybody that lives in a state where life insurance proceeds and cash values are judgment proof. But being able to use that in business can really protect a large amount of capital.
We have clients that are in the dry cleaning business as well. And dry cleaning businesses can be equipment intensive. I was thinking of one client in particular. I went back and refreshed on some of the details on this case. They They recently took a policy loan for acquiring another company. It was about $250,000. They're expanding their operation. They also take policy loans for buying equipment. And I was researching some of the equipment. Some of that equipment's pretty interesting. We should put the link in the podcast description so you can go look at this interesting equipment. I don't even know what some of it does. But there are these machines that have interesting names, like a Lager or a pant topper. What do those things even do? Well, you have these machines. The Lager does the legs of a pair of pants. You put one leg in, and then this thing comes down, and you put another leg in, and this thing comes down on top of it, and then it cleans the legs, and then it opens up, and you take the pants out. But that doesn't take care of the tops of the pants where the legs go in. And the torso sits. And so then you take those over to the pant topper machine and you slip them on like there's this little miniature pair of legs sticking out, and you slip them on, and then this machine blows up and holds them on and cleans the top part of the pants. So all these specialized machines, the commercial dryers sometimes are financed. That's equipment that's a specialty need in that business. And the business owner has the capital to be able to finance that in their life insurance policies. It's a wonderful thing.
And I'm thinking of our clients who own a donut shop in Oregon.
Oh yeah, I was thinking about them too. So this woman's daughter came to her and said, she had finished school and she would like to start a business. And Mom, what kind of a business could we start? And they decided that their town needed a donut shop. They found some used equipment. Someone in Portland was going out of business. And so they went to look at the equipment, and the gentleman not only showed them the equipment, he started showing them how to use the equipment. And they were able to purchase all the equipment they needed for this donut shop. And he told them, hey, if you ever need help with it, let me know, I'll help you. And they ended up opening a donut shop, wildly popular.
Then something totally unexpected happened. The state of Oregon shut them down and said, you cannot open because you are not an essential business during COVID.
Yeah, and they were in the state of Oregon, which had some really draconian laws that went on and on and on about, keeping the business closed. She finally decided to put a sign in the window telling people masks are not required. I think you could open up at this point, but you had to wear masks for everything. Police came and got them, and they were fined quite heavily, and the lawsuits went on for years, and finally she called and was able to take a loan from the policy. She did have to pay that, but she didn't have to shut down her business because she had the capital to take care of that loan and to be able to go on with the business, continuing to make money, and over time she'll be able to get that paid back.
That's not necessarily an exciting thing to use a policy loan for, but it does happen in business. You're going to have those unexpected regulations that come along, things that you weren't expecting. I think of another client during COVID in 2020 where they had to shut down, but they had their life insurance cash values, and they were able to tell their partners, don't worry, we have enough capital to get through this tough time.
Mm-hmm. Going back to that mother and daughter, now they have this business that they're running, and they realized, hey, if something happens to either one of us, we need to be able to, especially the daughter, if something happened to her mother, she would need to have the funds to buy out her mother's share of the business and pay her father off. And, if there was a spouse involved, the same thing. If something happened to the daughter, she'd want to buy the spouse off. So they then bought insurance policies to cover their lives that they could take care of that buyout. So another way to use insurance to cover business owners.
That's called a buy-sell, funding a buy-sell agreement. A buy-sell agreement is in the corporate minutes of how this company is going to be resolved if one of the partners dies or leaves. And the very least expensive way to fund a buy-sell agreement is with life insurance.
This reminds me, our conversation today, about what Nelson Nash used to say. How much of the banking function do you control as it relates to your needs? That's the key question here.
Because your need for finance in life is extensive, because everything that we purchase is financed. We either give up the interest on money we spend, or we pay interest and principal to someone else, and that money walks out of our life forever.
As you can see, business owners have quite an opportunity to use participating whole life insurance, but they're not the only ones. Many people think life insurance is for when you die, but you can also use the life benefits of life insurance while you're still alive.
Another group that has the opportunity to use life insurance to benefit the members of that group is families.
If you have a family or know of a family, you're going to want to listen to what we talk about how families benefit from the infinite banking concept right here next week on Wealth Talks.